what's your position with crypto as a whole? Are you still bullish, somewhat bearish?
So I do think that this down move, this breakdown, and we had this bearish channel. In fact, let me show my chart here so we can kind of gauge that. But basically, the writing was on the wall that we were going to head lower, and the question is, how low are we going to go? And you can see this channel here. If we connect these lows and drag it up to these highs here, this was a bearish channel. I mean, when you have a drop like this and price consolidates without breaking to the upside, it inevitably breaks to the downside. So to me, this is the next move to the downside. Now, what's interesting about this is I do look at it as the beginning of the last move down, meaning that wherever we bottom out here is likely the bottom in Bitcoin. A couple things, and this is going to what I was talking about in the video that I wanted to reveal, is that basically when I look at FTX, I see Lehman Brothers. And I haven't heard anyone else drawing this comparison, but if you look at the power that Lehman was in that time as one of the major banks and where FTX was as one of the major exchanges, both of them failing make a lot of sense as being that catalyst. Now, what's fascinating about this is if we go to the S&P 500, right? And I'm going to go all the way back here. We're going to go all the way back to 2008. Bear with me as I get there, because it is quite a ways back. But if we go all the way back, what we can see is that when Lehman Brothers occurred, all right, this is where it occurred right here.
Yeah.
You can see that the S&P was not at a bottom, so it wasn't the bottom, but it kind of created that last drop in the markets that brought us to the low of 2009. And so one of the things I was thinking about is, okay, it took about 6 months from Lehman Brothers to the low on the S&P 500. So in that thought process, if FTX is the Lehman event of the crypto markets, you're looking at about 5 to 6 months before we bottom, which puts us in April of next year, May, somewhere June-ish, right in that vicinity. And then if you look at the price decline, it went from about 1,200 and change to the low in 2009 of around 600 and change. So 40 to 50% decline. So then if we map that over to the crypto markets and we go to Bitcoin here, what's fascinating about this is that you basically take a 50% decline from about 18,500, which was the break point. And if you zoom out, there's a long-term trend line going back to 2017 before the bull market to the 2018 lows of the bear market to the crypto low. And where does that trend line go? Basically to that 40, 50% decline. So for me, I start to put the pieces of the puzzle together and say, okay, this cycle, again, not quite the same as past cycles. This will be a little bit of a bigger correction, which makes sense with the Fed and with what's going on with FTX. But again, you can kind of start to see the similarities developing in this environment versus what happened in the Lehman Brothers collapse. And I do think it's very, very similar. And remember, it's similar because greed and fear are what rules investors, right? It's not, there's no fundamentals. It's greed and fear. Fear drives it to the downside. Greed drives it to the upside, to the crazy extremes. And so the Lehman collapse created the same type of fear that the FTX one is, which is people drawing out their money from exchanges and so forth. So it's kind of cool to think about it like that. But then that's to me what I'm expecting here. I think this is the final drop, and I think we'll bottom in the next 5-6 months. Yeah, so there's no doubt there is going to be a chain reaction of issues, right? I mean, when you have these institutions, number one, the biggest thing for crypto right now is that when you have big institutions that get burned to the tune of billions of dollars that they invested in FTX, they're not going to go invest in more crypto projects until we get regulation and transparency. So right away, that just shuts off that door to the rest of cryptocurrency. And that's a problem, right? I mean, it's going to stop innovation in the near term. It's going to make it so hard to raise any capital until we get this regulation out there. So I think overall, he's right in that it's going to cause more pain. There's no doubt that it's just the tip of the iceberg in terms of other, hopefully no one any bigger than FTX, but there's going to be other bankruptcies. And I think if you look at the .com era and compare what went on there, you have to expect a lot of these smaller cryptos to ultimately get flushed out and go to zero. Again, in the .com era, we saw the same sort of greed driving some of these companies that had no reason to go up to $100 million valuations or greater go up, and they had to be taken out. And I think that's exactly what we'll see here in the crypto market for the next 3 to 6 months. So to me, I think that for Bitcoin, that's actually part of the first dip. So right now we're technically, they haven't announced that we're in a recession. I think we probably are, but according to the Fed and government, we're not yet. So I think this is the first phase. What I'm thinking is the first phase is what helps drive Bitcoin to its low pivot. And then I actually believe that the second phase, where the economy actually is going to suffer the most, will actually be where Bitcoin flips and starts to become a safe haven for assets. And the reason it's going to flip is because you're going to start to have a lot of investors looking at the economy getting worse and worse and worse, and they're going to start giving up on stocks like Apple and Microsoft and these other ones as the consumer just runs away. And so the question is, well, where do you put your money at that point? And this is going on the assumption that we do have regulation and transparency within that period. But I do think that once we get that transparency in the crypto market, smart money, billionaires, they're going to start moving towards Bitcoin. And I actually think in that second dip, Bitcoin actually outperforms. Yeah, I think that's the key, is that it's whoever comes out and survives this next period in crypto, that's going to be the long-lasting king at that point, or queen. And I do think that that's the positive for Ethereum, is that it certainly seems like it's the most stable of these layers to be built on.
How does BNB show up on your charts right now? Because it is one of those that has been a very solid token. How does it perform over the next period of time?
Yeah, so right now it's holding support. So I mean, if there's one to keep an eye on in terms of potential upside, you can see this trend line here, definitely holding that line. You can see we're right on it. So as an investor, if you're thinking about investing in this, and obviously this isn't advice, but you would want to see price hold this 270 level. If it starts trading below and holding below, it does become vulnerable for a move to the downside. But right now, comparatively to the Solanas, to even Ethereum, it's at least holding its own. And I think bottom line is, when you look at what went on with FTX and what you can see from other exchanges that have had trouble, a lot of people are saying, okay, which are going to be the ones that are standing following this period? And I think right now the feeling is that Binance is going to be one of those, and that's why price is holding up a lot better.
What is your outlook for December in terms of the Fed and the CPI when it comes to interest rate on the next round, and what the CPI might do? What are your thoughts on this one, Gareth?
So I'm going to go with a 25 basis point hike. I think it's either 25 or 50. I think that we're starting to see, hopefully the Fed is noticing the labor market, the layoffs at Meta and so forth. And I think they'll go with the lighter version to be a little bit safer going into the holidays, make sure that it's not a horrendous Christmas season for the retailers out there as well. Although again, keeping inflation down, they might want it to be a little bit of a worse holiday season. So I would say 25 basis points at this point is what I'm factoring in. And then I think after that, they're going to pause for a few months and reevaluate. So I think, it's one of these tricky situations where I still am in the camp that they've done way too much. I think that maybe at best we've seen one of the 75 hikes factored into the economy at this point. We know that there's a 6 to 9 month delay there. And I do think that one day we're going to wake up and say, holy cow, this economy just slammed into a wall, and the Fed is going to have to react and maybe even lower interest rates if things get bad enough in the not too distant future. We're talking second half 2023 though. Yeah, so I think for me it's kind of keeping in mind that they still want to hike a little bit. They don't want to totally step aside. So 25 gives them that ability where they can then pause afterwards. But I think for the market's sake, it's going to be looking at the economic data. And as of now, for the last 6 months, bad news economically has been good news for the markets. And I think that in 2023, in that first half, we're going to start to see a shift. Once the Fed stops hiking, and we get this bad economic data, the markets are going to now say, okay, well, when are they going to cut? And the Fed's going to say, hey, listen, and we're going to see the inflation numbers. So, I mean, if inflation is still 4% or 4.5% or 5%, there's no cuts coming. There's no way the Fed will end up cutting. And that's when bad news is bad news. And you're going to see the stock market react accordingly.